and welcome to Business Morning. I am Bisi Adebayo. Oil prices are heading for a fifth week of gains after major producers agreed to continue to restrain production to cope with coronavirus hit demand, even though the compromise fell short of expectations. Brent was up over 1.8% at $49.60 a barrel in early trade after gaining around 1% on Thursday, and WTI also climbed 1.53% at $46.34 a barrel. OPEC and Russia on Thursday agreed to ease deep oil output cuts from January by 500,000 barrels per day, failing to come to a compromise on a broader policy for the rest of the year. OPEC Plus will meet once a month to review conditions, and monthly increases will not be greater than 500,000 barrels per day. The increase means that OPEC Plus is set to reduce production by 7.2 million barrels per day, or 7% of global demand from January, compared with current cuts of 7.7 million barrels per day. OPEC Plus was expected to continue existing cuts until at least March, after backing down from plans to raise output by 2 million barrels per day. And back home now, the National Union of Air Transport Employees on Thursday grounded activities of Arik Air over staff welfare issues. The union members who occupied the gate of the airline's office earlier in the day alleged that the carrier placed about 40% of the workforce on compulsory leave. Officials of the union add that the signing of the conditions of service, which they have been negotiating for the past 3 years, still has the issue of severance packages as a bone of contention. Meanwhile, the management of Arik Air says it's currently engaging the union in a bid to put an end to the impasse. We're still talking about issues surrounding the airlines now. Last month, the federal government revealed plans to commence the disbursement of the 5 billion naira bailout approved for the operators in the aviation sector. And of this sum, airline operators would get 4 billion naira, while other businesses in civil aviation will receive 1 billion naira. But a lot of questions are being asked about how far the funds will go in aiding the operations of the airlines, whether it is to pay salaries, to service airport charges incurred during the COVID lockdown, or even to stabilize operations post-COVID-19. I have with me an aviation consultant at Aglo Aviation Support Service Limited, Tayo Ojiri, who's right here with us to discuss this issue. Good morning, Mr. Ojiri. Thank you for coming on the program. All right. I mean, it's evident. You can see the situation with Arik Air. But before we go further into that now, what is the status of the funds right now? Any idea where they were likely to be disbursed?
Before we actually get to the funds, it's good to actually put a foundation on what's happened, which everybody is aware of the negative, significant impact of COVID-19 on the aviation sector. We tend to say we've been the worst hit prior, because we're the first to get hit. You had all the airlines and the airports shut down in April, even before all the sectors of the economy got the impact. Prior to COVID, aviation contributed 1.7 billion to Nigeria's economy and actually provided 241,000 jobs. But between January to November this year, we've seen minus 53.3% decline in the number of flights and capacity. And we've actually now seen about 970 city pairs decline, from 970 city pairs to 100 city pairs. So we've actually now seen lots of airlines globally, domestic in Africa, as well as particularly in Nigeria, experience tremendous fiscal constraints as a result of COVID. Let's put in place as well that prior to COVID as well, Nigerian airlines actually had underlying financial issues. We had 2 major airlines under receivership, which is Arik is one of them. And now, after COVID, the government said they were going to provide the solution of 4 billion to the airlines and 1 billion to the service providers. That has not been disbursed yet. Should it have been disbursed? Yes, it should have, because immediately COVID struck and we saw all this impact on the airline sector. We've seen lots of airlines and lots of governments across the world. They appreciate the impact of aviation being an enabler and an economic catalyst. And in lieu of that, what they've done actually given money. There was the CARES Act in USA, where $250 billion was actually allocated. United got 10.5 billion. Lufthansa got 9.6 billion euros. We have Air France and KLM as well. They were all given palliatives, as I would say, or support from the government. All in all, we've actually seen, till date, about $173 billion from government to airlines. In Africa, particularly in Nigeria, we've not had that. In Africa, we've actually seen Air Cote d'Ivoire, the government of Cote d'Ivoire, give $20 million to Air Cote d'Ivoire to sustain them during this time, $20 million. We've seen Rwanda Air, because the Rwandan government, because of the strategic importance of aviation to the economy and to tourism, they've actually been able to give 147 billion Rwandan currency to the airline. For us, we've actually allocated this 5 billion naira, but it's yet to be implemented. Most of the airlines, as we speak today, are in intensive care, sorry to say. We actually need to give them first aid for them to jig them out of that situation and then bring them to the recovery section. But even then, this 5 billion is yet to be disbursed. The implementation process is yet to be deciphered. Are we going to, at one point they were actually saying it's going to be airlines that are members of the airline operators of Nigeria. Now, who are those that are operating? And even what would it apply to? 4 billion is not a lot of money within the aviation sector. So what would this focus on? What it's been focused on, or what needs to be focused on in this point, is actually staff welfare, human capital resource, and the payment for that, because that's what that money would actually be able to address in the short term. Now, in the short term, it's been able to see that 4 billion, what are the number of staff on the payroll as at March when when COVID struck? What's a payroll? This has not been all highlighted for everybody to see. And the longer it's taking for this to be implemented, unfortunately, it's not going to augur well for the aviation sector in Nigeria.
So with all of what you have said now, of course, plus several arguments that even this amount, this 5 billion or this 4 billion that is set aside is not even enough to rescue the airline. So if we were to put a particular figure, how much do you think is actually required? How much will go a long way in reviving or aiding these airlines or preventing a total collapse?
To aid a total collapse, we've actually, IATA has actually said there's no perfect amount, and nobody has that checkbook. No government has to actually address the healthcare, infrastructure needs, security needs. No government in the world actually has that. So to answer your question, what needs to be done is not just one total amount, but what needs to be done is opportunities for the airlines as they grow and as they deem fit. Why do we need to? Nigerian government in particular has actually had a partnership with central bank to give single-digit interest loans to the airlines for 500 billion naira. So airlines are able to draw from this for their operations and to meet their maintenance and other Forex needs. That is one portion. There's the opportunity with African Development Bank to be able to partner with African Development Bank. That way it opens an array of foreign investment equity into the airline sector. And that's able to actually sustain them, because with high interest rate, that's actually a negative impact on the operations of Nigerian airlines, especially when 80% of the operational costs and maintenance and even training is in foreign exchange. And foreign exchange is very difficult to come by now.
Absolutely. That's another issue entirely. Now, but, I mean, the airlines began operations after the lockdown about 3 months ago now. So how has it been like in terms of recovery, you know, and then what's the cost been like?
June 8th precisely was a start-off date. And yes, we actually embraced the start-off process, and it was good. But don't forget that aviation is driven by the economy. As we speak about the COVID's impact on aviation, COVID has it significantly impacted the economy as well. Prior to this time, we had talked about the impact of oil and the price of oil. During COVID, the price dropped. That affected our earnings. And since the government is the biggest spender, they're not able, people who are not flying, lots of meetings, there was no need for people to travel to Abuja. We have a triangle, which is Lagos-Abuja. So that domestic traffic was actually down. Like you said, it was 53.3% down from during this time. Yes, capacity has been actually down, 32% capacity load factor. So when you're actually flying with a positive load factor should be like about 80%. When you're flying 70 to 80%, when you're flying with 32%, that would impact on your earnings. That's why the domestic airlines are unable to meet their commitments and even pay staff. So that's why you find out that they've reduced the supply arm, whereby number of airplanes flying are limited. It has a negative impact, whereby we've seen the cost of airline tickets now increase, which is not going to augur well again for people to fly. There's need for people to fly now that there's I'll call a restriction, removal of the restriction on travel.
And then don't forget the purchasing power as well, because when the price of the tickets are quite up, how much passengers would you possibly get?
Absolutely, that's a negative impact we're going to get. We're going to see this. This is actually going to leapfrog into 2021 first quarter, because aviation is a lagging or indicator of the economy. So what we're going to see is that people are not going to fly, even though it's the holiday season. People are not going to fly. People are used to doing meetings with technology now. The economy is not on 6 cylinders, so people don't have that disposable income to fly.
So how have the airlines been able to finance the operations, aircraft maintenance, training of personnel, even the payments of jet A1 fuel? How have the airlines been able to manage through these very difficult times?
I wish I could speak for them, but what we've seen from surveys is the fact that they've reduced capacity. Hypothetically, you have about 20 aircrafts, you've reduced that to 5 aircrafts. So your cost of operations reduces tremendously, and that way you're actually cutting staff a lot. You had some, prior to Arik cutting staff, you had Airpeace let go some staff, but they were called back. But you find out that, to answer your question precisely, they cut down the number of operational equipment and the number of overhead that they're grappling with. They're still grappling and challenged with the sourcing of foreign exchange. Sourcing of foreign exchange is through central bank, and even though they have a preferential rate, they're not able to get that rate to meet these demands, which is affecting operations.
Now, let's talk about this aid again that we're talking about at the beginning now. Of course, the government is saying that these funds will be disbursed transparently. Do you actually think that can be achieved without any dissenting voices from operators?
There are already dissenting voices from the operators. You already have the issue of which airline gets it. We had about 3 weeks ago where they said airlines supported by governments, which is the 2 in receivership, or Ibom Air that is owned by and operated by Akwa Ibom State, is not eligible for those palliatives. So already there are dissenting voices on who should get what. And if they can actually put their ducks in a row and ensure that they actually put a united front, commit a united front to the government, and actually a transparent united front as well, have a payroll platform that actually shows who was on that payroll and how it was dispersed prior to COVID. So it's verifiable. Prior to it's transparent and prior to COVID, so that they can show that to government, and government is able to disburse this before things get out of hand.
Now, just like you mentioned at the beginning of this conversation, of course, even before COVID, a lot of airlines were actually struggling to survive.
Yes.
Now, of course, it's quite a known fact that AMCON is still recouping, its bad debts with some of the airlines, and past intervention funds didn't go so well. So what are the chances that this bailout wouldn't be any different?
What we'll see after, if the bailout, like I said, they're in intensive care, once you take them out of intensive care and they're stabilized, the next step is, as we've seen, COVID is going to has provided the opportunity for the airline sector and aviation sector for a reset. So it's not all gloomy. It's an opportunity moving forward after COVID, or the opportunities for COVID for these airlines either to merge and then or provide opportunity for equity buyouts, or you find out that they reposition or re-strategize their model, where their model is focusing on either domestic, secondary airports, regional airports, or cargo, and cargo. So all these scenarios will play out and would help the airlines strategize. So it's one thing for the disbursement to be done, is one other thing for them to actually get the result, but that's not going to help them in the next 6 to 12 months. They need to stabilize and actually be operational and be firm with that. So this is where the opportunities provide themselves, and this is what we envisage moving forward.
So when are we likely to see a recovery process for the aviation industry, especially in Nigeria? When are we likely to see a recovery?
Looking at the crystal ball, we're looking at partial recovery 2021 last quarter. But that will, why we say that is, I just don't like throwing numbers out, is what we see is there's a forecast that the economy is going to come out of recession at the second quarter of 2021. Aviation is is driven by disposable income. Government is the biggest spender. So when there are lots of conferences, lots of travels, lots of meetings across Nigeria, domestic aviation would move faster first, and we've actually seen that in comparative analysis with China, with India, with Europe. Domestic traffic would start first and would actually move fast, then regional traffic, and that's how we see it evolving. So that's why we said 2021 last quarter.
Now, let's return to the issue of Arik now. Of course, Arik Air has declared 3 staff redundant. This has just come in.
3 or 300?
300.
Yeah.
300 staff redundant.
Yes, that's correct.
So, what's your reaction to it?
Well, we saw that coming anyway. With 300 going, because in the last 6 months, they forwarded about 1,600 staff, and out of that, they had been on basic salary for the last 6 months. So without revenue coming in, and with most of the aircrafts out for heavy maintenance, there's no way they could have, commercially speaking, there's no way they could have been able to survive it.
So what's the possible way out of all of these challenges with airlines?
It was natural evolution, which is sorry to say, but it's the reality. Some airlines, and we've seen, I'm not a prophet of doom, we've seen airlines due to COVID and prior to COVID gone bankrupt. Even the best of them, Virgin Atlantic, actually placed category Chapter 15 bankruptcy in New York Stock Exchange and the New York Security Exchange Commission. We are going to see some airlines go bankrupt in Nigeria. It's the reality. And we're going to see new ones evolve and new models evolve. But the reality is, come second quarter of 2021, we're going to see some airlines actually go bankrupt.
Wow. All right. That would be a point where we'll leave this conversation. Aviation consultant at Aviation Support Service Limited, Mr. Tayo Ujuri, thank you for being with us this morning.
It's always a pleasure. Please ensure you fly.
Absolutely. We can't do without flying anyway. Welcome back. And just in line with our conversation around the aviation industry, news just coming in this morning says that Arik Air management has declared 300 staff redundant. The airline says in a statement that this has arisen from the devastating impact of the COVID-19 pandemic, and this has led to the constrained ability of the airline to complete heavy maintenance activities and return its planes to operations. It has also stunted revenues against increasing operational costs, and the management of Arik Air has had to declare 300 staff members redundant to its current level of operations. Now, the leadership of the impacted unions have been contacted to negotiate a redundancy package for the affected staff. Well, Arik says that it's important to note that over 50% of the airline's workforce of over 1,600 staff have been on furlough in the past 6 months on a base allowance. A decision to let go of the staff, they say, is naturally a very difficult decision, and Arik Air wishes the impacted staff well in their future endeavors. Right, now let's switch our conversation now to the CBN latest policies. Now, of course, in the last few days, the CBN has published several circulars around the foreign exchange and the liquidity of the banks, and one of which includes the latest policy on diaspora remittance, which kicks off today, December the 4th. The financial regulator says the announcement became imperative after consultations and engagements with relevant stakeholders over the smooth implementation of the recent policy, which is aimed at providing a more convenient channel for Nigerians in diaspora to remit funds back to Nigeria. But this is the focus of my next conversation with the senior economist, head research and strategy, Greenwich Merchant Bank, Mr. Ayodeji Ebo. Good morning, Mr. Ebo. Thank you for joining us on the program this morning. Let me begin by asking you, what necessitated this move by the CBN?
Thank you. I think just to put a bit of background, so what we've been having before is that when remittances are being made, or when you have Nigerians in diaspora sending money to Nigeria, they send using the different IMTOs, which are the international money transfer operators. And when you send your dollars, for instance, $1,000, you get it in Naira. And the CBN has determined the rate at which the conversion is done. And I think the CBN has observed that that has been some form of this incentive for Nigerians in diaspora to send funds through that official channel that has been set up by the CBN. So in essence, what the CBN is trying to do now is to see how, one, Nigerians can gain value for their proceeds when they send money home, and also to create liquidity for other markets, especially the unofficial markets that we have. So what would typically happen now is that Nigerians will be able to get their money in dollars, in foreign currency. Either it's credited to your domiciliary account or you receive it in cash. You now have that leeway to decide at what rate, depending on which markets you intend to change the currency to Naira. So that would create some form of liquidity and will reduce that pressure in the informal segment of the FX market.
Now, based on this policy that now allows beneficiaries to receive their inflow in dollars, how beneficial is this policy to the recipients?
Okay, very interesting. If you look at the difference, when you look at the spread between the unofficial market, which we all call the parallel market, when you compare it to the official market, whether it's the investors and exporters window, or you are also looking at the CBN rate, you will discover that the spread is, I think, even as at last week, was as wide as almost 95, 96 Naira. So what would happen now is that rather than the recipient receiving Naira at the bank rate, which was below 400 Naira, they can decide to go to the unofficial market to change the foreign currency to naira, and that will give them more value. And as we progress, it would also reduce that margin because now there will be more inflows through the official channel, and also that flexibility of conversion will now be there. So when you look at the remittances in the past year, based on estimate, I think in 2019, we had about $23 billion worth of inflows from Nigerian in diasporas in form of remittances. And this amount is just what has been captured through the official window. So with this new policy, what we would see is that we will have more Nigerians being comfortable to come in through this official window, and we expect that to increase in 2021. Because of the COVID-19 pandemic, yes, we're expecting that remittances would normally would reduce this year, but would begin to see that flow into that FX inflow to the unofficial market as we progress.
And so what sort of impacts will this have on the Forex markets in return?
Yeah, what we would see is that there will be some form of correction and reduction in the spread. We've noticed that there's been a bit of scarcity of FX within the unofficial market. But now with this new policy, we can see that appreciation in the Naira within the last 4 days. As at Monday, Naira opened at 500 Naira when you're looking at the unofficial market, and has appreciated to around 470 as at yesterday. And we also look at even the investors and exporters window. We've seen that currently, as of yesterday, the Naira even traded above the 400 Naira threshold within that market. So what we would see is there will be some form of convergence in the different segments of the market, and that would begin to provide some form of clarity to potential investors.
Now, let's talk about the policy related to the introduction of the CBN special bills. What are your thoughts on this?
Okay, thank you. So if we also recall that most of the banks have been debited for not meeting up with the loan to deposit ratio threshold of the 65%. So in the last few months, a lot of banks have been debited in trillions, and this cash has been with the CBN earning zero return. And as a result, it has distorted the liquidity ratio of some of the banks. So what the CBN is simply trying to do now is trying to return that cash to the system, but not returning it as cash, would be issuing bills to replace that instruments that will be tradable, can be sold to local investors, and what that would effectively do is to help tame the potential of causing inflation, because if that form of huge amount of cash comes into the system, that will spur significant liquidity in the system. So what we feel is that CBN is also just looking for that structure to see how they channel back that fund into the system. And that will give the banks the leeway for them to create liquidity. They can discount by selling to retail investors, institutional investors, and create cash, which they would also channel to the real sector. So by and large, we feel that it's positive for the banks.
So how will this affect Nigerians who are investing in the treasury bills?
Yeah, what we expect to see is that, one, the available investment securities would have increased, and depending on the rate at which these bills are issued, we would see. When we look at providing some bit of background. Last year, around I think November, the domestic investors and especially retail and institutional investors, were excluded from participating in OMO bills, which led to significant liquidity in the Nigerian Treasury bills market. So what would happen is that with these new special bills and with what this policy has said, that the banks would also be able to sell to retail investors. So we would see more interest from retail investors, but will be premised on the rates. Currently, when you look at the yield environment, it's almost near zero yield, which is not attractive for retail investors. We've only been seeing much participation from the institutional investors because of the policy that guides their investment. So what the retail investor tends to benefit is that if the bills are issued at very attractive rates, then there will be a shift from the normal Nigerian Treasury bills market to these special OMO bills, or special bills rather.
And then what about the stock market, which has been some sort of safe haven for investors lately? Won't this in any way affect the boom that we have seen in recent times due to possible higher yields?
Yes, thanks for that question. So we've seen year-to-date market has gained over 30%. And we expect if yields begin to improve in the fixed income market, that would have a negative impact on the stock market. That's given. But depending on the rate or how much movement the policy is able to achieve within the fixed income space, most investors will also be looking at it from a dividend yield perspective. So when you look at the equities market, dividend yield will stay around, when you look at the average for the market, around 6%, which is significantly higher than even a 7-year instrument, FGN instrument. So we'll still continue to see interest within the equities market, but it will be premised on the amount of movement that we see within the fixed income market.
So would you expect this move to release excess CRR to fuel inflation in the economy? And what's your projection for inflation in the coming months? Yes,
based on the policy or the structure that the CBN will be using, we don't expect any direct impact on inflation based on this CRR policy or special bills. But looking at our projection for inflation, there are several factors that will drive the inflation for November. So in that month, you will discover the implementation of the reflective tariff was implemented, which led to about almost 60% increase in electricity tariff. You also recall that the PMS price was increased by about 6% to almost 160 naira. The land border closure is also a major pressure point. Then FX scarcity also is another point that would further pressure inflation. Then lastly, the land border closure is also a major area that would lead to higher inflation. So in summary, we expect that inflation would almost approach the 15% levels in November, given all these factors that were mentioned. If we look at, especially looking at food inflation, we don't expect any impressive harvest because during the peak of the planting season, that was when COVID-19 was also at its peak. And also, some areas in even the north also suffered significant flood. So when you juxtapose most of these factors, we would see that the inflation rates would increase almost towards the 15% levels in November.
Now, well, based on the objective of the CBN to increase lending to the rail sector, how do you think this would actually impact the rail sector?
Okay, the issue of the special bills the way we feel that may impact the real sector is now the banks will now have the leeway. There's one of the banks that has close to 1.2 trillion of in excess based on the cash reserve requirement with the CBN. So if that fund is now structured, is now sitting in form of bills, the bank would look for other opportunities to earn more income. But which also don't is also for us not to lose sight of the risk that is still very prevalent in the economy. So we know that, yes, banks will begin to change focus and see how they want to increase lending. But because of the inherent risk, we don't see them going very aggressive. 2021 would be a tough year for most of the banks with this low yield environment. And also, when you also look at the structure, the challenge, the recovery that the economy is also going through. So for most of the banks, for them to cover this gap, they will need to be more strategic in terms of lending to the real sector.
Senior economist, head research and strategy at Greenwich Merchant Bank, Mr. Ayode Diebo, thank you for speaking with us this morning.
Thank you for having me.
Now let's check out Thursday's numbers at the NSE, where negative sentiment persisted as investors sold off on Tier 1 banks UBA, GT Bank and Zenith Bank, and that led to a 0.3% drop in the all-share index to 34,968.9. Total volume of trades declined by 21.5% to 289.39 billion units, valued at 7.35 billion naira, exchanged in 4,878 deals. But a stockbroker or a trader at Stanbic IBTC Stockbrokers, Afolabi Gbenro, joins us now for a review of the market. Good morning and thank you for joining us on the program. Can you give us a brief overview of yesterday's activities at the market?
Okay. Good morning. Thank you for having me. So yesterday was primarily driven by deals in MTN. MTN was lifted to 160 naira for a transaction of about 25 million units that traded there. It thereafter closed at 156.20. The rest of the market was sort of relatively quiet. We saw decent volumes in UBA and Zenith Bank also exchanged. So the banking, apart from MTN, was a major driver of activities yesterday in the markets.
So how long do you see the negative sentiments persist? Are we likely to see that continue today?
So far, it has actually started off negative. The all-share index is currently down about 0.7%. This is because of the transaction that just happened in Dangote Cement, about 2 million shares exchanged hands, and Dangote Cement is about 2.3% down. So far, so it's likely to sort of persist today, not as aggressive as we have seen. It'll get to a point where we'll start to see investors looking at prices as being attractive again, and then they'll start picking up stocks again.
And what's your outlook for next week?
I think next week I expect it to be a quiet start, more of the same trend that we've seen this week, with mostly sort of prearranged crosses or block transactions driving activities.
Trader at Stanbic IBTC Stockbrokers, Afolabi Gbenro, thank you for your time this morning.
Thank you so much.
It will be time to cross over to London, plus the debt and currencies markets when we return in just a moment. Please stay with us. Let's now travel to London, where Simon Pusey will be speaking to this morning's headlines coming from the UK. Good morning, Simon. It's good to see you again. The Bank of England has come under heavy criticism for losing track of £50 billion of banknotes. How did this even happen?
Yeah, it's a bizarre story, this, isn't it? As you're right, as you say, the Bank of England seems to be a tad unclear on the whereabouts of £50 billion worth of banknotes, and it doesn't seem to be overly concerned about it. That's according to a group of MPs, at least. The Commons Public Accounts Committee is what it's called, and they said the money, which is equivalent to a stack of £5 notes more than 800 miles high, had essentially gone missing because the bank did not keep close enough tabs on cash usage. We have recently pretty much gone cashless here in this society, of course. with contactless payments on cards and on phones. And of course, the coronavirus, meaning a lot of shops do not take cash anymore. Despite walls, though, 8 foot thick and an imposing reputation for guarding billions of pounds of gold bars in its vaults, the Public Accounts Committee said the Bank of England had nonetheless displayed a pretty lax attitude to the whereabouts of sterling and the cash supply. They speculated, the Bank of England, that this money could be stashed away under mattresses as unreported household savings may have been taken abroad. People, living abroad, keeping cash on them. Worth pointing out, this is a drop in the ocean for the bank. 50 billion does seem like a lot of money, but it is a tiny fraction of the trillions of pounds in money circulating in the UK economy in physical notes and also by digital transfers.
That's quite interesting. Now, PM Boris Johnson has set out a new carbon emissions target of 6 to 8% reduction annually by 2030. How does he even intend to go about this?
Yeah, so the UK will cut greenhouse gas emissions further and faster than any other major economy in the next decade. That's according to a new carbon target set out by the Prime Minister, as you said there. They're aiming for 68% in annual carbon emissions by 2030 compared with 1990 levels, and a significant increase on the current target of about 57% in reductions. The raising of ambition on tackling climate breakdown is intended to galvanise other countries to follow suit as Boris Johnson prepares to co-host a virtual summit of world leaders on the climate next week. The Prime Minister said, "We have proven we can reduce our emissions and create hundreds of thousands of jobs in the process." Last month, Boris Johnson did set out a 10-point plan that he said would start what he called a green industrial revolution and included a commitment to phase out petrol and diesel cars, build new offshore wind farms and invest in hydrogen fuel. Campaigners, on the other hand, do say that, and climate experts as well, say that the government should have gone further to seize the opportunities offered in green jobs and low carbon economic growth as the UK struggles, of course, to emerge from the coronavirus. And I would say that there is going to be some more legislation coming out in the next few days. I think another white paper on the climate will be coming out. So I think the government may go slightly further than they've said they will go there.
We'll wait and see that. Now, let's talk Brexit. The negotiations took a step backwards on Thursday after furious French lobbying pushed the EU to make late demands. That would go against Simon, but there's really no time.
Yeah, so pizzas were seen being delivered late into the night last night around the area where they're having these negotiations. So about 1 a.m. these pizzas were coming in, a big stack of about 15 of them. So they were obviously working late into the night. The UK and the EU will, of course, resume those post-Brexit trade deal talks today, despite a senior UK government source saying the prospect of a breakthrough is receding. And with time running out, sources suggest that Brussels had made new demands on how rules and regulations should be enforced, those sources being UK sources, of course. But an EU member said that there were never any surprises or new demands from their side. Both sides are, of course, urgently seeking compromises in key areas, which include fishing rights and competition rules. This is all areas we've covered so many times before, of course. Business Secretary Arik Sharma said the talks were in a difficult phase. He added that the UK had said all along that it wanted the EU to recognise it as a sovereign and independent nation, and it was on that basis of that a deal will be done. So I think those fisheries especially, they're saying that, we are a sovereign country, these are our waters, and we should not be allowed to, to let European fishermen into those waters, and that's the same on those competition rules. So it's those two main sticking points that seem to be still the case. But as you say, time really is running out. It was really supposed to be last week that there was supposed to be a major breakthrough, and it doesn't look like we're getting one this week. So yeah, it really looks like we're up against it in terms of getting a deal.
All right, Simon, thank you. We'll see you again later. And back home at the debt and currencies market, the head fixed income market, Bankole Odusoya, joins us now for a review of the fixed income market. Good morning, Bankole. Thank you for joining us on the program. Can you talk us through what shaped yesterday's activities at the fixed income space?
Good morning. Yeah, market is it's quite slow right now, and it has to do with what Higher DG Ebo had explained earlier concerning the anticipation of special bills coming from central bank. Those bills are supposed to be released in order to ameliorate the liquidity situation. Those bills are likely going to be short-term, but we do not have details about the effective yields yet. If all banks receive these bills, it is thought that there will be so much in their hands, they will be trying to sell some of these bills for cash, and some banks will try to sell these bills and switch to better yielding assets like FDN bonds. So there's been mixed reaction in that some see bonds as attractive right now, being proactive, and for the market generally on the treasury bill side, we've been finding it difficult to sell treasury bills because of the expected additional volume of bills that are going to come in. Of course, the uncertainty is not helping because we don't know the effective yield, but it's a very cautious market right now.
So what sort of impact are you traders expecting this to have on yields in the coming days?
The impact on yield is that we've seen marginal rise, an increase in yield as prices have started dropping. Basically, because it also coincides with year end, we are seeing profit taking. A lot of that is happening, and we expect and anticipate that going into month end. But for the short-term assets, it's no hold right now. You do not want to have excess bills with you and then get additional bills from the central bank. So most houses are reducing their positions, taking profit, and simply looking for higher yielding assets as we speak.
So with all of this now, give us an outlook for today and the coming week.
It's a bearish market. We expect marginal increase in yield. And then on the bond side, as we tend towards the auction in the next 2 weeks, we also expect people to take profit on past auction wins and then reposition at the bond auction, where 2035 bonds and 2045 bonds will be reissued.
And fixed income markets, Bankole Odunsoya, thank you for joining us on the program this morning. Head fixed income at UBA, actually. Thank you for your time. And just before we wrap up the program, let's remind you again of this piece of news coming in this morning from Arik Air management, which has declared 300 staff redundant. And the airline says that this, of course, is due to the devastating impact of the COVID-19 pandemic, leading to the constrained ability of the airline to complete heavy maintenance activities and return its planes to operations. It has stunted revenues against increase in operational costs, and the management of Arik Air says it just had to declare 300 staff members redundant to its current level of operations. Now, the leadership of the impacted unions have been contacted to negotiate a redundancy package for the affected staff, and that's according to Arik. Of course, the airline also says that it's important to note that over 50% of its workforce of over 1,600 staff have been on furlough in the past 6 months on a base allowance. The decisions to let go of staff is naturally a difficult decision. That's according to Arik Air, and the airline is wishing the impacted staff well in their future endeavors. Of course, we know that yesterday the National Union of Air Transport Employees had grounded activities of Arik Air over staff welfare issues, and the union members actually occupied the gate of the airline's office earlier in the day, alleging that the carrier placed about 40% of the workforce on compulsory leave. And officials of the union are also saying that the signing of the conditions of service, which they've been negotiating for the past 3 years, still has the issue of severance packages as a bone of contention. And the management of the airline is saying that it's currently engaging the union in a bid to put an end to the impasse. So we do hope that both parties will come together and find a lasting solution to all of these issues. And that's where we end today's program. Thank you for watching. I am BC at Debayo. See you next time.